Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burnham with your top stories. Tech gets tested. Asian stocks slumped to a two-week low, with futures pointing to selling on both sides of the Atlantic. Apple shares, meanwhile, slide as it hikes retail prices in the wake of soaring chip costs. Well, the New York Times reports that OpenAI will delay its planned IPO to next year. And a ship is struck in the Strait of Hormuz, complicating efforts to restore traffic through the vital shipping route. Well, those are your headlines. Happy Friday. Good morning to you. And that tech sell-off looks to be back underway after yesterday's rally. This week really marked by tech volatility, and it's especially been a roller coaster week for the Kospi in South Korea. Now down 7.7%. It has been down 9% this morning, and we saw trading halted earlier in the session for the second time this week. That negativity bleeding into a sea of red across Asian stocks. Softbank shares also knocked by that New York Times report that OpenAI may hold off on its IPO, delaying returns for its Japanese backer, and that souring sentiment for tech more broadly. So Nasdaq futures, as you can see, down 1.5%, significant moves for this time of the day, and that's setting up a bearish mood for Europe later. As you can see, futures down 0.9%. Now, if we flip over to the cross-asset space, we have Brent below $75 a barrel this morning after that projectile strike on a vessel in the Strait of Hormuz. Two-year Treasury yields are down, so we're adding to yesterday's gains for Treasuries that on that lower than expected PCE number, damping Fed hike expectations, and the dollar ever so slightly bid this morning after a down day yesterday. Now, let's take a look at the risk events on the agenda for today. At 9 a.m. London time, we'll get the ECB's inflation expectations survey, followed at 10 a.m. by the Italian consumer confidence numbers. And then at 3 p.m., we shall get the University of Michigan consumer sentiment data to wrap up the week. So, of course, through all of them, we'll be looking for the impact of the latest in the Middle East. It's a busy day before we get to the weekend. Let's get started. We begin with Asian stocks slumping to a two-week low, with the tech sector coming under renewed pressure. Let's go straight to Winnie Su. She's in Hong Kong for us. Winnie, what are you focused on this Friday morning?
Yeah, morning, Lizzie. We are seeing a very steep sell-off in Asia today, with the MSCI Asia here down more than 3%, taking its weekly loss to the biggest in about 3 months. Now, you just mentioned it is driven by tech. And in fact, yes, we have a bit of a pullback after that sharp rally yesterday on the back of the upbeat earnings from Micron. But today, the concerns seem to be more around the price hikes by Apple. And the theory is that while these hyperscalers might not be able to absorb the cost, they are raising the prices, and that's going to hurt consumer sentiment and further down even the demand for the chip makers. And we are seeing that negative loop playing out in Asia's markets today. That's why instead of seeing a divergence between AI winners and losers, we are seeing tech stocks broadly down, with Kospi here leading losses down almost 8%, while the tech-heavy Nikkei 225 in Japan also down almost 5%. Now, flip aboard, we take a closer look at some of these tech names in Asia, because we have Samsung Electronics and SK Hynix leading losses, despite a report that these two companies are going to announce hundreds of billions of dollars of investment on Monday for their capex investment. That is really not helping sentiment today as much. And adding to that, you just mentioned that report of OpenAI potentially delaying their IPO to next year, also hurting Softbank, down about 14%, its biggest intraday loss since November, given that the company has a large stake in the company. And of course, MediaTek, one of Apple's suppliers, also down about 10%. Back to you, Lizzie.
Winnie, thank you for the update. That's Bloomberg's Winnie Su in Hong Kong. Well, Nasdaq futures are lower, so setting up the bearish mood for both Europe and the US. Let's go global now. We can speak to Bloomberg MLive strategist Mark Cranfield. So, Mark, it really has been a choppy week for tech. We had Winnie there outlining what's happening in the Asia session. But as I say, this is expected to go global. So really, what's at the crux of this sell-off?
Yeah, what you're seeing is a shift towards selling in the chip makers, which is a bit of a change to what's been happening over the past couple of weeks. So investors have been getting used to the idea that the so-called hyperscalers, which is mostly the Magnificent Seven stocks in the US, they've been spending very heavily. They've got plans to spend enormous amounts of money over the coming couple of years, up to $1 trillion worth of spending, and that's been hurting those stocks. But on the flip side, you've seen the chip makers such as the Microns, the Samsungs, the SK Hynix. They've been doing extremely well because they're the ones that are profiting from this expansion from the hyperscalers. That's flipped around in the past couple of days where we're seeing the chip makers get sold off as well. So now you've got it on both sides of the equation. It's starting to hurt. And of course, in Korea especially, very heavy participation from retail investors. You're probably getting a bit nervous as we come towards the end of June. There may well be the risk of margin calls. A lot of it is on leverage as well. And then when you get stories, as Winnie was talking about, Samsung and SK Hynix, extensive spending plans of their own over the next several years, people are beginning to think they may have overdone things, that they're extrapolating too much growth at a time when the hyperscalers have already built in so much already. So we're getting into a situation where the numbers are not quite adding up. Can these companies really continue to make amazing profits when we're getting towards maybe the peak of a cycle here in terms of investment? So those questions are being thrown around today, and that's partly why you're seeing this sell-off. It's going to be pretty difficult to pull back before the end of the month, given it's also the end of the quarter. So it's very likely this kind of bad mood will continue into Europe and into North America later today.
Mark, speaking of the numbers not quite adding up, if we turn to the macro and as we look back to yesterday's lower than expected PCE data, notably it was still the highest annual increase since 2023. Is the market putting too much faith in Kevin Warsh by pairing Fed hike bets?
Yeah, I mean, exactly as you say. I mean, a 4% PCE number, maybe in terms of what people were forecasting, the estimates for the specific numbers yesterday, it wasn't too far away. But an absolute number of 4% is way too high in relation to what the Federal Reserve wants for its inflation target, somewhere closer to 2. Our colleague in London, Simon White, had a very detailed piece yesterday explaining that consumers in America have been better at projecting where inflation is going rather than the market itself. So if Kevin Warsh really wants to have credibility, he's got to take those numbers a bit more seriously maybe than the market is doing so. It's going to be very hard for him to explain away how he can keep interest rates on hold when you've got inflation numbers running way above target. There will be a little bit of oil prices have come down a bit, so that will probably deflate the numbers a little, but not enough to satisfy people who think that the Federal Reserve have waited too long and that they were in an easing mode when they should have really been in neutral at least. So there's a lot of a disconnect here. Market is still pricing for at least one interest rate hike this year. That looks quite justified. Now it's up to Kevin Warsh to prove his credentials and to tell the market, yes, I really mean to fight inflation. Backtracking now will be pretty dangerous. If he does, long end of the Treasury curve will not like it at all.
Mark, thank you. That's our Bloomberg M Live strategist, Mark Cranfield. Well, let's dive into the root of those oil price moves today. We're looking at Brent down more than 2% this morning, $73 the barrel. And this is after a Singaporean-flagged container ship was struck by an unidentified projectile in the Strait of Hormuz yesterday, in the first reported attack after the interim peace deal between the US and Iran. Now, the attack represents a significant setback in the efforts to restore the safe passage to the waterway, as US Secretary of State Marco Rubio reiterates his stance on tolling in the Strait.
One thing that came across very clear is there is zero support among the Gulf countries for any sort of toll or fees or anything that charges for the use of international waters. The President's made it clear that's not going to happen. It's not going to be a part of this. It cannot be a part of this. He made that clear again yesterday in the Oval Office in a press availability that he had, and I reiterated that point, which I think was a welcome message from our partners here to hear that as well.
Let's get more from Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar, who joins us now from Dubai. Abir, good morning. Is the attack likely to deter vessels from attempting a Hormuz transit, do you think?
Good morning, Lizzie. We don't know yet is the short answer. What we know is that the Ever Lovely, which, as you mentioned, is a Singapore-flagged medium-sized vessel, was attacked. No one has taken accountability for who attacked it. It is believed that the RGC might have done the attack, but that is not confirmed yet. So all we know really is that the ship has been attacked for not sticking to the transit rules that had been set out through the Strait of Hormuz. Is it going to cause other vessels to reconsider when they go through the Strait of Hormuz? We're not seeing signs of that just yet. This could be just a blip along the way, Lizzie. And again, Iran has made it very clear that vessels going through the Strait of Hormuz need to seek the appropriate approvals from the government before making those transits. We're still seeing a trickle of movement through the Strait of Hormuz much higher than what has been the case during the period of the war over the past couple of months or so. So we still wait and see if ships decide to U-turn, if other ships or other ship owners have their confidence hit when it comes to passing through the waterway. As of late, we've reported that over 60 million barrels of crude oil and products have been passing through the Strait of Hormuz, some without any clear destination, but still that is a movement that we hadn't seen during wartime since late February at least. And so just a few things to keep in mind here before making those Strait of Hormuz transits. Iran did say last week through its foreign ministry spokesperson that the Strait of Hormuz is never going to go back to the state that it was at before the war, and that those tolls and fees will have to be implemented after the 60-day period, Lizzie, something that Secretary of State, as you have just heard Marco Rubio say, that it isn't going to happen. The U.S. is not going to allow it, and it finds that notion unacceptable. And so a lot of caveats still remain. For the time being, we're still seeing ships making their way through the Strait of Hormuz. The Ever Lovely itself has made its way out of the Strait of Hormuz despite the damages to its bridge that it had seen, according to our team's reporting. And so we go back to the state of wait and see. The impact on oil prices was marked early in the session, but we see Brent crude in particular dropping at the time being.
Okay, Abir, thank you for the update. That's Bloomberg's Abir Abu Omar with the latest in the Middle East. Well, still ahead on Daybreak Europe, a bullish sales forecast for Qualcomm as the chipmaker's CEO says that the current data center landscape presents better opportunities. We'll bring you the highlights from his conversation with Bloomberg yesterday. But first, Apple shares slide as the company hikes prices for some of its top products. We'll discuss the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 here in London. Well, Apple shares fell in Thursday's trade after the company raised prices of Macs, iPads, home devices and the Vision Pro to offset cost hikes caused by a shortage of memory chips and storage. With us to discuss this and other big tech news today is Bloomberg senior market strategist Neil Campling. Neil, good morning. Just give us a historical sense of the significance of these price hikes for Apple. Are we in a new era for the company?
Morning, Lizzie. Yeah, it's a big surprise. If we look back, Apple has massive pricing power with its suppliers. It's the biggest buyer of semiconductor chips over the last 15 plus years. So for Apple to have to raise prices because of component shortages sends shockwaves through the tech complex. It sends a concerning message to maybe future demand drivers. And we're not talking small price increases here either. We're talking on average around about a 20% increase to these product pricing. And now investors are going to be looking out to wonder about the demand cycle around the key product as to what happens probably in September when the new iPhone will be launched. But even during COVID, Apple didn't need to basically raise prices to reflect these kind of shortages. So if Apple's struggling, then what's happening with all the other companies that have much less pricing power than Apple does? So that has sent shockwaves through, I think, the tech complex and actually overshadowed the Micron earnings print yesterday for sure, and it's definitely sort of caused that the discussion you had earlier around the concern in terms of the tech price reaction to these kind of situations.
Well, yeah, another story that's important for tech sentiment this morning seems to be the New York Times report that OpenAI, the ChatGPT owner, of course, is leaning towards waiting until 2027 for its IPO. How much does that raise questions about the pace of AI commercialization? Does it take pressure off Anthropic?
It could well do. I mean, and Anthropic is probably is on a path that it would appear to be faster growth. And a larger revenue size than OpenAI currently, and maybe that's reflective of being able to raise funding recently and being on a path to IPO sooner. These big AI models do obviously burn through a lot of cash in terms of building out these complex systems. So the faster they come to the market, probably the better. And it does raise questions as to why is OpenAI potentially delaying their IPO. And you've seen the investor Softbank stock taking a hit this morning on the back of that as well. So you could say that the latest update is advantage Anthropic in terms of the current situation. But this is something we need to keep an eye on for sure over the course of the next few months coming into that into the Q3, Q4 window of IPOs.
You got tennis on the brain, Neil, in your whites. Thank you for the analysis. That's Bloomberg's Neil Campling. Thank you very much. Have a great weekend. Well, we've plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Qualcomm CEO, Cristiano Amon, says that the current data center environment presents better opportunities for the company. Speaking to Bloomberg, he also outlined Qualcomm's bullish sales forecast.
$5 billion in fiscal 27. It's a high confidence number that we have based on customer engagements we have right now. Most of the revenue is from custom ASIC engagement that expanded since the acquisition of AlphaWave. And you started to see in their revenue some of this innovative technology we came up for accelerators that doesn't require HBM memory is our high bandwidth compute. And as we keep executing on those customers, we're excited to see that revenue going to about $15 billion in fiscal 29.
I am curious, Cristiano, when it comes to those longer term targets and the bridge between the short term, so what you have put out there for 2027, is there any sense, I know you haven't named the customers that get you over that bridge here, but is that going to fill the hole of that $5 billion based on the $1 billion that we already know is out there?
Look, the $5 billion, as I said, it's, I'll give you the composition. I think what I can say right now, I think, as you'd expect, a lot of those contracts are governed by non-disclosure. We have one large hyperscaler customer in the United States, one large hyperscaler customer in China, and then we have some other engagements that we had on a data center. That is all into the $5 billion. So the $5 billion it's a very high confidence forecast to which we have the customers, the capacity, the memory allocation, and everything. As we think about the engagement we have today, and also we talk about a contract that we have with Meta, also for 2 generations of the CPU, especially as we position ourselves for the agentic CPU opportunities, that those engagements are into the $15 billion number. For Qualcomm, as a new entrant, those are great numbers, but really, when you look at the scale, what's happened in the data center, you would imagine as we execute and we show our differentiation, there could be upside, but we're just, being focused on the engagements we have today.
I do have to ask, though, and investors seem pretty pleased with what they heard yesterday about you articulating this longer-term data center strategy. But I'm curious, I mean, you famously exited the data center business back in 2017, 2018, and I know there were a lot of reasons for that went beyond your operational control. But there was a lot of competition then. There's probably even more competition today. Why do you think you can get it right now compared to what it was 8 years ago?
Yeah, look, the circumstances, I think, when we started on the CPU, actually, I know people talk about data centers as a general term, but we started a long time with an ARM-compatible ISA CPU very early. There was a big software barrier. This was before AI. And, at the time, I did not, the market wasn't ready for it, only until later. So it was kind of probably the right decision for Qualcomm at the time. This is a different conversation. It's a different data center right now. This is about AI. But it's a valid question, right? So I will give you the same answer that I gave when we entered the automotive business, when we entered the industrial business, and everything that we have been doing to diversify the company. Those are fast-moving markets now, changing with technology. So where we really focus is not what the data center is doing today, but what the data center is going to be doing tomorrow. The data center is now moving to agentic. That's why you see CPU companies on the rise. You see demand on the rise. The data center is being disaggregated. It's not one single GPU that does everything. You have different hardware. And we're coming out with a comprehensive portfolio. We have a CPU. We have a new memory solution that is not a memory from the memory provider. It's actually been designed by Qualcomm that doesn't require HBM. We have a different accelerator for the disaggregated compute, and we have our semiconductor scale, which is good for custom ASICs. So that's what we're doing. If technology matters and you have fast innovation cycles, there's room for Qualcomm.
That was the Qualcomm CEO, Cristiano Amon, speaking to Bloomberg's Romain Bostic. Now, let's turn to some of our other top corporate news this morning. Microsoft has raised prices for its current generation Xbox consoles yet again, citing a shortage of components. From August the 1st, prices will rise by $100 for 512 gigabyte models and $150 for 1 terabyte versions, while the 2 terabyte model will be phased out. The company says that memory and storage costs have risen more than 2.5 times and could double again by 2027. Elsewhere, JP Morgan has named Troy Rohrbaugh and Doug Petno as co-presidents following the departure of consumer banking chief Marianne Lake. The move positions the two men as potential successors to CEO Jamie Dimon. Rohrbaugh will replace Lake as head of the consumer business, while Petno will be sole chief of the commercial and investment bank. And Bayer shares notched their best day since 2003 after the US Supreme Court delivered a verdict that shields the German company from thousands of claims that its Roundup fertilizer should have been labelled as a cancer risk. The justices voted 7-2 to throw out a $1.25 million verdict won by a Missouri man who blamed the product for his non-Hodgkin lymphoma. Well, those are some of our top corporate stories this morning. Just checking in on these markets as we head towards the European cash open, because we've got a bearish mood on the horizon thanks to the tech sell-off that we're seeing globally following the misery that we've already seen in Asia. So the Kospi paring some of its losses now. It had been down 9%. So now it's down about 6% at the moment, down just over that. And the MSCI Pacific Index down 2.7%. But it's red across the screen in Asia. You've also got NASDAQ futures down 1.2%, which is significant at this time of the day, partly thanks to Apple hiking prices, partly due to this potential delay for the OpenAI IPO reported by the New York Times. And therefore, we also have European stock futures down following this mood. We're down 0.7% at the moment, so a less pronounced hit thanks to Europe's lesser exposure to tech, but red across the screen this Friday morning. Coming up on the programme, could Andy Burnham revive Labour's fortunes? What new polls reveal about the popularity of the man angling to be the UK's next Prime Minister? That's next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burdon with your top stories. Tech gets tested. Asian stocks slumped to a 2-week low, with futures pointing to selling on both sides of the Atlantic. Apple shares slide as it hiked retail prices in the wake of soaring chip costs, while the New York Times reports that OpenAI will delay its planned IPO to next year. And a ship is struck at the Strait of Hormuz, complicating efforts to restore traffic through the vital shipping route. Well, those are our headlines this morning. A very good morning if you're just joining us. 6:30 a.m. here in London. Happy Friday, but it's not happy in these markets. We have that tech sell-off back after yesterday's rally. It has been a week marked by tech volatility, and it's particularly been a wild ride for the Kospi. On the left there, the South Korean index now down 5.9%, but it has been down 9% this morning and traded halted earlier in the session for about 20 minutes for the second time this week. That negativity bleeding into the rest of Asia. The MSCI Asia Pacific Index down 2.7%. And we're also seeing souring sentiment for tech more broadly. So Nasdaq futures down 1.1%. And all of that setting up a bearish mood for Europe later. As you can see, futures down 0.7%. Now, if we flip to the cross-asset picture, we've also got Brent down $73 a barrel is where we trade, down nearly 2% as things stand. This after that projectile strike on a vessel in the Strait of Hormuz. In the Treasuries picture, we have yields currently down 2 basis points at 4.37% on the 10-year. We're down 3 basis points on the 2-year. And so Treasuries adding to yesterday's gains off that lower than expected PCE number, damping Fed hike expectations. Though you might ask, is that really what the market should be doing? Is too much faith being put in Kevin Walsh, as we were discussing with Mark Cranfield? The chance of a July hike now only about 1 in 3. But the dollar really is range bound this morning, not doing much. So just flat to the downside as things stand. Now, that's what's happening in your markets. Let's take a look at your front pages this morning, kicking off with the Wall Street Journal. And it leads on the latest exclusive executive changes at JP Morgan, which have positioned former trader Troy Rohrbaugh as one of the favourites to succeed JP Diamond at the helm of the US lender. Here in the UK, though, the Times focuses on details from the royal accounts, which it says show public funding for the royal family is set to double to £100 million by 2028. And finally, if we look over to the Financial Times, this morning it leads with calls from former Bank of England chief economist and Andy Burnham advisor Andy Haldane for a simplification of the UK's tax code and cuts to regulation as well, if this government is serious about growth. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Well, let's stay with UK politics, shall we? The honeymoon period of the UK's likely next Prime Minister, Andy Burnham, is underway. Labour gaining against Reform UK in twin surveys from YouGov, as well as Find Out Now. It comes as speculation continues to mount about Burnham's prospective policy and his top team. And for more, we can speak to Bloomberg Opinion's Rosa Prince. Good morning, Rosa. You've been writing about all of this. You've said that Burnham might be more business-friendly than perhaps thought. Why is that?
Well, I just wonder. Andy Burnham has been in politics for a long time. In recent years, he's really projected an image of something of a class warrior, a bit of a socialist. But he now no longer has to win a Labour leadership contest. It's all, the path is cleared for him. He's almost certainly, bar the proverbial bus coming down Whitehall and hitting him, he's going to be in 10 Downing Street within the month. And I wonder if that means that he no longer needs to kind of
OK, Rosa, it seems like we've lost you for the moment, so we'll try to connect to you again. Would be great to dive into your thoughts. For now, that's Bloomberg Opinion's Rosa Prince, and you can get her column on the terminal at OPIN Go. We'll try to get back to Rosa later in the programme. But let's turn to some other top stories we're following for you this morning. King Charles has disclosed his personal tax obligations for the first time in his current role in a bid to increase the transparency of the British monarchy's finances. The King voluntarily paid just under £13 million in personal income and capital gains taxes for the 2024 to 2025 tax year. It's the first time a monarch in the modern era has revealed their personal tax bill. Elsewhere, Chinese cars made up more than 1 in 10 new purchases in Europe for the first time last month. Consumers are flocking to models that offer better features for less money. Analysts at Dataforce say that Chinese automakers also captured nearly a quarter of all new hybrid car sales, while demand for fully electric cars from China also rose. And New York City's Rent Guidelines Board voted to freeze rents for roughly 1 million stabilised apartments. The move hands Mayor Zoran Mamdani a major political victory and delivers on a central promise that launched him to City Hall. The board voted 7-1 to pass the freeze, which applies to both 1- and 2-year leases. It's the first time that rents for longer-term rental agreements have been frozen. Elsewhere, the death toll is rising in Venezuela after back-to-back earthquakes struck west of the capital, Caracas. At least 188 people are confirmed dead and more than 1,500 injured. The quake also toppled buildings and damaged the country's main international airport. The government will create an initial fund of $200 million for repairs to infrastructure, hospitals and housing. Well, those are some of our top stories from around the world. Let's turn now, though, to today's Big Take, in which Bloomberg explores how 2 Lundin oil executives are on trial in Stockholm, accused of indirectly encouraging atrocities within their resource concession in Sudan by military and paramilitary groups. Prosecutors say that the defenders chose to keep doing business with the Khartoum government despite being aware of attacks on civilians. The 2 men have denied allegations, with their lawyers arguing that they were neither involved nor aware of the attacks on civilians in the oil concession. Let's get the details now. We can go to Bloomberg's Simon Marks out of Nairobi. Morning, Simon. Just spell out for us the significance of this trial for our international audience.
Yes, of course. I mean, this trial really is somewhat unprecedented. You have to go back many decades to just after the Second World War to get these sort of trials, white-collar crimes being alleged, during the Nuremberg process. So it's very rare that you have such senior executives in an oil company up on the stand for indirectly encouraging atrocities of this nature. So I think, for the business community, for people looking at doing business around Africa in sensitive areas where there's a lot of conflict, this is a real landmark case. And depending on the verdict in a few months' time, it will really be a huge trial of precedent in this area.
And what are prosecutors alleging the company's executives knew or should have known about the violence in Sudan then?
Yeah, well, Sudan back then was a very restive place. There was a lot of violence between the government in the north, run out of Khartoum under Omar al-Bashir, and rebel groups in the south. And prosecutors allege that they asked the army in the north to come in and shore up the drilling wells and to make sure that they could carry out their exploration and their attempt to get oil out of the ground. But indeed, there was a lot of atrocities happening. Bombs rained down on villages, women were raped, men were killed and recruited in many cases. And this was all heavily documented at the time by the UN and rights groups. And so they allege that there's no way that these executives at the top of the firm couldn't have known what was happening and what was being carried out by the government at the time to protect this oil investment.
But of course, there are a lot of businesses operating in conflict zones around the world, but particularly in Africa. What impact could this have in future for them?
Yeah, you're right. There is a lot of widespread conflict in many countries across Africa, nonetheless in Sudan right now. There is a raging civil war in Sudan and in what is now South Sudan. Obviously, where this concession is based is now based in South Sudan following a referendum there in 2011. It's still a very difficult place to do business. So I think depending on the verdict, and even if they're not found guilty, this case has gone on for many years. It's interviewed dozens of witnesses. And it's a lesson, I think, for big companies doing business in these sensitive areas that indeed Sweden has universal jurisdiction. So you don't have to be Swedish to be found guilty from these crimes. They can investigate anyone they want, no matter where they come from. and no matter where their business is registered.
Simon, we really appreciate you bringing us this story. It's absolutely fascinating, even if gloomy. Simon Marks, thank you, with the big take today, which you can find on the terminal and at Bloomberg.com. Now, let's go back to Bloomberg Opinion's Rosa Prince, shall we, for the latest on the UK's likely next Prime Minister, Andy Burnham. Rosa, morning again. So you were telling me about how Burnham's worn many hats over his time. Maybe he's more business-friendly than we had thought originally. And maybe because he isn't going to be in a leadership contest, it seems, there might not be so many giveaways for the left wing of the party.
Yeah, sorry for my dodgy Wi-Fi, Lizzie, earlier. And the big hint, I think, to why Andy Burnham may be a little more centrist on the economy than had previously been thought is that we learn that he has appointed James Purnell as his chief of staff. Now, Purnell was an MP alongside Andy Burnham, very much on that Blairite centre, taking that very centrist approach to the economy. And I think that sends a strong signal to the markets and anyone else who would worry about a Burnham premiership that he's not going to be that kind of red in tooth and claw socialist that he's sometimes portrayed as.
Well, you wonder whether all of this could be undone by the appointment of his Chancellor, for example, if he goes for Ed Miliband. And of course, we've got that speech coming next week. So we do wonder if we're going to get that announcement of the Chancellor next week, if he's laying out some of his economic thinking. I hear that there's a plan to do something radical with the Treasury. Just tell us more about that.
Yeah, so this is an idea that has been floated around by some of his advisors. Bloomberg reported that he is being advised by Andy Haldane, former very senior economist, and Louise Hay, who is a rather left-wing backbench MP, former transport secretary. And both of them have advocated for the Treasury to be split up and for the creation of a separate department that's really devoted to growth and just keeping the Treasury for those fiscal matters. As you say, I think that Chancellor appointment is really key. Some suggestions that it could be Ed Miliband, again, more on the left of the party. He's the Energy Secretary, and I think his appointment as Chancellor would really upset one Donald Trump, who, as you know, constantly calls for the UK government to resume drilling in the North Sea, something Miliband has very much set his hat against because he is more in favour of renewables.
Yeah, and Donald Trump already making a dig at Burnham, saying he was the mayor of a town. Manchester's not a town, it's a friendly city. Rosa,
exactly.
Thanks so much.
It's
That's Bloomberg
city.
Opinions. Hit it. Bloomberg Opinions, Rosa Prince. I think Birmingham might have something to say about all of this, but you can read Rosa's latest piece on the Bloomberg website or through the Open to Go terminal function as well. Now, coming up, how Naples is becoming a thriving European hub for young people, driving economic growth. We'll have the details from Italy next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:45 a.m. here in London. Well, South Korea's stock market is slumping today, but it has been on a stunning run, powered by an AI-fueled chip rally. However, extreme volatility and heavy reliance on a few companies may mean that it's a bubble just waiting to burst. Bloomberg Originals has been looking at why South Korea's AI stock mania raises red flags and what it could mean for markets around the world.
South Korea may have an ant problem. Although it's not these type of ants, but rather these.
코스피는 101%예요. 진짜.
There are more than 14 million retail investors in South Korea who are called ants. Individually, they don't have much power, but collectively, they have a greater influence in the market.
And these ants have been busy.
Up by more than 100% so far this year. Just an unbelievable rally.
It's really quite extraordinary what's happening in Korean stocks at the moment.
The Kospi index, which tracks Korea's public companies, climbed 200% over the last 12 months. Compare that to other major markets, like the S&P or even the Nasdaq, and Korea's performance blows them out of the water.
That means it has more than tripled over the past 12 months, retail investors, they've been the main driver of the Kospi. We can see signs of being a little bit maniac and a lot of people borrowing money to invest in stocks.
And amid the mania is a mounting fear that a bubble will soon burst.
The AI bubble debate is absolutely raging right now.
South Korea is one of the biggest beneficiary of the global AI trade because it has two of the world's largest memory chip makers.
Korean stocks are really maximizing being beneficiaries of the AI capex bubble. That's the amount of money that's pouring in around the world, but particularly in the US from the mega cap stocks into building AI data centers.
So, are South Korea's retail investors building towards the future, or will they get wiped out?
I don't have a strong insight of when it goes wrong. But when the AI bubble collapses, the pain in Korea is going to be extraordinary.
And subscribers could watch that full documentary now on the terminal or on our website, Bloomberg.com. Well, Italy's having its own tech renaissance. Naples leading a regional revival that could be a game changer both for Italy and beyond. Fueled by a deluge of European Union cash and investments in tech, the city is attracting young professionals, helping it become a European hub. Bloomberg's Western Europe economy reporter Alessandra Migliaccio joins me now from Rome. Morning, Alessandra. Just talk to us about how Naples is attracting investors and young people to move to the city.
Yeah, so we crunched some numbers and we were surprised to see that Naples is doing incredibly well, surprisingly well, especially given the time period we're in and all the crises around the globe. So in 2025, southern Italy grew 0.7%, whereas the rest of Italy and northern Italy both grew just 0.5%. And the Naples region in particular grew 0.9%. So that's a big difference. 0.9 to 0.5 these days in Italy is a big difference. And it's just a sign of how the pace is picking up. No, we're not saying that Naples is richer than Milan. Of course, Milan is the industrial capital. We're just saying that something's happening. And it's not just 2025. We did the number crunching. We went backwards. We looked, and between 2019 and 2024, it's grown. The whole South has grown 7.7%. compared to 5.8 for the rest of Italy, approximately. So something's happening, and it's happening because of several things. And one is this flood, this deluge of European Union cash that's been helping with infrastructure. It's been pushing investment in tech. And so for once, even though Naples is far away from, the industrial north, the rest of Europe, the center and the core of Europe, it doesn't really matter because tech doesn't need to be next to coal mines or things like that. Tech needs to just have the investments. So there's hope, and it looks like it's a real trend. It's not just, flash in the pan. Something is happening in Naples.
Okay, really interesting. So not competing with Milan, but starting to become something of its own and picking up pace. How does it compare to other European hubs?
So it's not, of course, there's things that we need to say. The demographics in the region are not great. The population is much lower than other countries because for so long it's been poorer and has had issues. But things are happening, so it doesn't really compare to, say, Paris or London or things like that. But it could compare to cities like Bordeaux, Marseille, cities that had a past and are now picking up. And what we're seeing, for example, is that the startups, we looked at how many startups. In Naples, it's second only to Milan, which is the industrial capital of Italy. So it's second only to Milan for numbers, and it's just very interesting companies. And the university system, it's, you have Apple has a lab there. You have Accenture, Cisco, Deloitte has hired, hundreds of people. And young people are starting to come to the city and are taking advantage of the fact that you get sun, you get beauty because it's incredible. It's on the Gulf of Naples with views of Mount Vesuvius for real estate prices that are still relatively low.
Okay, and so do we see this spreading beyond tech into other industries?
A little bit. And, just what's I think important in all this is that part of it is fueled by European cash. So I think the lesson learned is if the cash is spent well, and I'm not saying all of it was spent well, some of the cash, was dispersed, but we see that when it's spent on infrastructure, when it's spent on tech, you see an impact, and you see an impact over several years. So it could be a lesson, for the European Union that certain types of program, which are very targeted, can work and can make a difference.
Okay, Alessandra, thanks for bringing us that story. That's Bloomberg's Alessandra Migliaccio out of Rome. Plenty more coming up on Daybreak Europe. Stay with us. This is Bloomberg.
But there's been a kind of a disturbingly high component of services inflation, which isn't really from oil prices. It isn't really from tariffs. Why is it high? Historically, that's a pretty persistent type of inflation, so I do think it's worth keeping an eye on that.
Federal Reserve Bank of Chicago President Austin Goolsbee speaking there. And this is where we turn to the data. But of course, there is a new focus when it comes to the data. Fed officials target 2% inflation in their preferred inflation gauge, core PCE. But Kevin Warsh, the new Fed chairman, has described that index as a rough swag. He prefers trimmed averages. So if we start there, you can see in the yellow the Dallas Fed trimmed mean 1-year PCE. And actually, that has moved closer to the 2% target, 2.4% in the latest reading. By contrast, though, if you flip the board over, most other measures, core PCE and others, have suggested firmer inflation in recent months. And yes, PCE came in lower than expectations yesterday, but the annual increase was the highest since 2023, going back all the way here in the yellow line, hence the debate on the Federal Reserve in part. But to access these charts and all the charts that we use on Bloomberg TV throughout the day, if you're a terminal subscriber, do go to the function CHRT TV Go. Now, let's take a look at the risk events on the docket for today. At 9 a.m. London time, we've got inflation expectations from the ECB. That survey coming before at 10 a.m. London time, Italian consumer confidence numbers. And then at 3 p.m. London time, it's the University of Michigan consumer sentiment data. So all of this giving us a clearer picture of how the Middle East war and that interim deal are impacting consumers. And up next, Tom and Anna will be taking you all the way to the start of the European cash trade. They're on the opening trade, but that does it for Daybreak Europe. Have a great weekend. This is Bloomberg.